Good morning and welcome to this weekly market update from AGM Markets. Thursday, 25th of July 2014. What we'll do today is go through some technical analysis on Euro dollar, cable dollar, Swiss, Aussie and gold. Just to review what's been going on in the markets this week. We normally do these videos earlier in the week. I thought I'd just do a sort of review video this week because it has been quite quiet. I may do the video early next week, I'm not sure. It's just sort of depending on the markets are really. But anyway, yeah, I mean, it has been quite a quiet week, but it's the third week in the month. That does tend to be quieter than usual. That's one thing I've sort of noticed. But anyway, there are some interesting moves out there. Some pairs are starting to move. Some pairs have been a little bit quiet intraday, but anyway. So yeah, we're not making any trade calls recommendations in this video. You do trade at your own risk. If you can please read a full disclaimer on our website, which is www.agmmarkets.com, that would be appreciated. If any new followers out there, we have 3 moving averages on each of these charts. The red one's a 50 simple moving average, the purple is 100 simple, and the gold is a 200 simple moving average. Okay, let's have a look at the charts. This is the Euro dollar, the weekly chart. So what we've been speaking about. Well, in terms of fibs, it's been about, so that low move there, so it's got the low of 2013 towards the high of 2014. The 38.2, remember, we don't normally look, well, I don't normally look at it on these videos. So I mean, I just find it doesn't tend to hold as well as the 50% and 60%. But in terms of these videos, it's just nice and simple, just to just keep on sort of fib sort of retracement zones with the 50% and 61.8 here. But anyway, so remember we got that brief hold here, these sort of candles here, that was pretty much the 38.2. so you got a brief hold. It tried holding yesterday, but it struggled, and it's now coming down towards the sort of 200-day moving average, and 200-week moving average, and the 50% retracement. So the 50% retrace comes at 1.3370s here. Of course, we're still some way away from that, about 100 pips, but it is coming down quite quickly. The reason I think this 50% level is interesting is because you do have previous resistance at this level as well. You can see there, so 2013, also currently sort of 2012, that's where we're sitting at, just above the minute, some previous resistance there, so keep an eye out on that. So in terms, I mean, fibs to the other side, if we do get any sort of bounce up from there, in terms of fibs on the weekly chart, it's all about just keeping it simple there, playing the high of the year to the low of the year. If you flip it to the daily, there are some other sort of interesting points. A lot of people I would have thought would be looking at that move there, to this current sort of lows, or if we extend the lows. Remember what we were speaking about as well last week was this was the fib move there, and that was also for 38.2. I'll just draw that up to refresh your memory. It's around 38.2 there, remember, 200-day moving average was sitting around that level as well. So yeah, that move is played out. You can see, I think that may have been in last week actually, that sort of reversal candle there at the lows. It's just been struggling to sort of do any sort of bounce. It's just been grinding lower and lower. So I mean, you're a very brave person to sort of buy Euro dollar, and that's why I think in terms of the next key support zone, which I do think will get some reaction at, will be this move here. And also one other thing to keep an eye about is this here. This is the trendline support, which so you're taking the low of 2012, the low of 2013. We're currently broken below the that sort of low there, so that was last week's weekly candle of 2014. We are currently below that, so do keep an eye on the weekly close this week. I mean, if we get some, I mean, we do have some, I think we've got durable goods orders out, and we've got German IFO actually at 9 AM. So if we get a really strong Eurozone number, then a really weak durable goods, then I suppose we could reverse and close inside that, but it is looking quite unlikely, but you never know. So yeah, do keep an eye on that weekly candle close as well. So yeah, in terms of shorter term time frames on Euro, we've spoken about the daily, the 4 hour, nothing major really, to be honest with you. I mean, if you're an aggressive seller, it's just all about sort of playing the sort of the shorter term trend lines like that, for example, one way to sort of sell the market. But in terms of selling opportunities, in terms of intraday stuff, what I've been looking at, I'm sure a lot of other people, is purely just keeping on sort of the round numbers, see how they're reacting. So you can see 135 is a brief sort of retracement, and if it does come up now, I think that'll be a key area to look out for. So you got 135.50s. 136s as well. These sort of key sort of round numbers have been playing out quite nicely. And in terms of just, because this is a key sort of area here, you can see where I'm hovering my cursor at previous support, then it came around here and then just sort of acted as previous resistance. It really struggled to, we had that bounce off of 135s, tried to pop up and just got sold off the sort of 135.50s, and this previous sort of support then acted as resistance and just grinding at lower. All of them you can see, yesterday we had some reversal action there, and it's just been struggling to get any sort of pop up really. Yeah, we're currently testing a sort of an intraday support zone here at the sort of 34. 34.50s is 134.50s there. You can see another sort of example of 50 pip increment where we've come back down and we've tested, we've got a bit of reversal, but you can see it's just really struggling to get any sort of healthy retracement towards the upside there. So euro is looking quite heavy. You can see yesterday's daily candle would some say it's quite a bit. Some people would say that is a reversal candle, but you have to keep in mind that there is a lot of upper wick on that candle. So sellers have been coming in that candle trying to push it lower. But yes, there is a bit of indecision, but you can already see today there's already upper wick formed on today's candle. So is looking quite heavy still. I think you have to be very brave to be buying euro currently off of these levels. Cable on the weekly chart is starting to get quite interesting now. It's been quite heavy this week, as you can see on this current weekly candle. When we spoke for ages I've been saying it's been due some sort of healthy retracement, but of course it has been just in grind high mode. Last week's weekly candle, the week before, was sort of slight retracement candles. You can now see that we're starting to get some sort of healthy retracement this week. What have we been talking about on cable in terms of weekly chart, in terms of fib moves? Have been these smaller dips. You can see them much clearer on the daily chart, and I'll flip them towards you. So we had that first one there, remember, and then if you extend your high and extend your low, you got that dip there. So the next one in terms of the low is that there, and this is the new high to keep an eye out for. So interestingly, I'm just going to flip it to the daily now. That's the fib that I'm personally keeping an eye out for. I thought a lot of people would be looking out for. It's the key fib, I think, in the markets. We have some previous support around here as well at the 50% of one sort of 69.42s. You can currently see we are sitting on the 50-day moving average. We are just currently below it actually, but so that's the sort of the key moving average to keep an eye out for in terms of a daily candle close today. If we do get any sort of weak US dollar action, then yeah, we could reverse off that, but I would not be surprised to see it come down towards this 50% or even this 61.8 actually, where the 100-day moving average is. So that's the key fib, I think, to keep. You can see it much clearer on this daily chart. All the dips have been playing out, lovely uptrend there. I should draw a sort of uptrend there, as you got there on cable. So yeah, you could see if you get any nice sort of confidence with that trend line, actually, it'd be another thing to keep an eye out for on cable. In terms of shorter term time frames on the 4 hours, it's similar to euro really. It's just been grinding lower. So it's all been about sort of selling any sort of dips off the sort of round numbers or key sort of support and resistance levels. And in terms of 50 pip increments, classic example, they're one spot 70.50s. Sort of got some sort in terms of intraday scalping stuff. This 170.50s has been quite interesting this week. You can see a few examples there where you can scalp towards the upside, but then as soon as it's got below and bounced back up, it's just got sold off at that level. I think 171s has been a key level as well for a while. You can see there, so there's a classic example here. We came back down into this 170.50s, got a brief bounce, then bang, got sold right at the 171s again, back down to 170.50s, retracement towards the upside, and got sold off just short of those 171s again. So the round numbers are definitely one to keep an eye out for as well. 169.50 is definitely a level to keep an eye out for as well in terms of today and going into next week as well. That 169.50s does coincide pretty much with that 50% retrace as well. So yeah, that pretty much, if you flip it to the daily, you can see there it pretty much lines up with that 50% retracement there. So interesting level going into the rest of the day and into next week as well. Dollar Swiss on the weekly chart starting to get nice and bullish. What have we been speaking about? It's all about this fib here. Remember, nice. So this is the fib from the low of the year to the high of the year. Lovely uptrend, retracement down to 50% retracement, nice weekly reversal, and we said it's just been grinding higher. We finally got that test last week of the 50-week moving average, and this week it's just been continuing to grind higher. It's now pretty much testing, it has tested, that 0% line, which comes at 0.9036. So the weekly candle close will be interesting this week. If we do close above that, I think the odds are over the next few weeks that we'll get a test of the 200-week moving average. And that's, in terms of the weekly, that's pretty much it. In terms of the daily chart, it's been a very interesting chart. I mean, you can see this fib in more detail, that lovely reversal candle there, which rotated towards the upside. And then, of course, we spoke about this in last week's video, this lovely smaller fib within the bigger fib, that played out really well. So in terms of this week, what I was personally looking out for and what I thought the market was looking out for was this sort of move here. If we did get any sort of retracement, then to keep an eye on that fib there, but it hasn't got down there. But you never know, we could get down there quite soon. Bear in mind we're testing that big 0% level, but so that could be an interesting one to keep an eye out for as well. In terms of shorter term time frame, nothing major. I mean, it has been quite choppy in this 4 hour. So lots of sort of choppy periods there, gets sideways action and then pops up. So it's another sort of sideways action here. So I'd not be surprised to see it pop up again, because it's very similar action to last time there. But nothing major to note of really in terms of shorter term time frames on dollar Swiss. Let's move to Aussie. Aussie on the weekly still going sideways, but it's still sort of slightly grinding higher towards that 100-week moving average. I think, and you can see the key sort of line in the sand here on this Aussie is the 0.9450 marker there. Key level on the weekly. We have multiple tests of this level and failures at highs. If failures to close the week above this level, so do keep an eye out on the weekly candle close this week. If we do close above that, then I think the 100-week moving average will be in sight. In terms of the daily chart, you can see there, I mean, yesterday's daily candle, classic example of a reversal candle, and you can already see that today's candle has started to grind lower a bit. I mean, in terms of the key fibs, this is one that we spoke about last week, and that's still sort of technically in play. I mean, we had this lovely uptrend, retracement down to the sort of 50% level in the 50-day moving average, and it sort of struggled to sort of pop higher. Both times it's popped higher. You can see we've got capped at 0.9050, so big resistance level there. It looks like we're going to come back down to this sort of 50% level again here on this Aussie dollar chart. In terms of the shorter term time frames, yes, we've had some sort of smaller sort of fib moves here. You can see that one there played out quite nice with the 61.8. So if you extend your fib towards the upside there, I mean, you can even take that sort of low there. I mean, it's quite a tricky one to play, but I would have thought a lot of people would be looking at this sort of fib move here. I think it's not a strong one there. You can see the previous 4 hour candle closed below that. You can see yesterday's daily candle is quite heavy, so it's not really the greatest of fib moves in my opinion, but you never know, it could sort of grind higher. But I personally like to get in terms of the bigger picture, I would not be surprised to see it come down towards this sort of 50% level, or this previous sort of support really. I mean, this sort of marker here. So you got pretty much in sort of 93.50s key level there. In terms of the round numbers, definitely a key one to keep an eye out for there. So it's pretty much just chopping between the sort of 100 pip range really. Nothing sort of major to speak about really on Aussie. It has been quite messy. I mean, that's pretty much evident on that weekly chart there. You can just see those sort of weekly candles. But even in terms of that weekly, actually, it is quite interesting. I remember speaking about this last week in last week's video. If you flipped that same fib on the weekly chart, it does look more bullish than bearish. You can see last week's weekly candle quite bullish. You can see this week we've gone up higher than we have lower in terms of this weekly candle. So we do have a green candle here. So you never know, it could grind higher, but I would not be surprised to see the next sort of couple of weeks continue to chop inside this level. I think we need a clear weekly close, either above the 0.9450 or below the 0.9350s on Aussie. Gold on the weekly chart, what have we been speaking about? Well, in terms of the week, actually hasn't been as interesting on the weekly. I mean, the only thing to note of really is this 50-week moving average. We're sort of currently below that at the minute. It has been a key sort of indicator. It's just been chopping around that level for a while. What has been interesting though is this daily chart and this fib move here. We spoke about this last week, so we had that nice bounce last week off that 50-day moving average, the 50% retracement, 100-day as well. Nice sort of confidence, a brief pop up, but it failed to pop up quite significantly. And surprise, surprise, what did it come down off of? Was the counter fib move there off the 50%. So downtrend, retracement towards the upside, and bam, we got sold off straight away that 50%. So if I put that original bullish fib back up, you can now see the key level we're testing is this 50% again, which comes at 12.9286. So that's the fib move to keep an eye out for. In terms of the 4 hour, it's been quite interesting actually. You can see there, I mean, that was lovely action that off the 200 SMA, really nice 4 hour action. But you can interestingly actually, we have had some 4 hour closes below this 50%. You can see we're currently getting capped at it. So previous support now acting as new resistance is looking quite heavy on gold. So I mean, coming into the end of the week here, these daily and weekly closes will be very interesting here. I personally think we will get a close above. I mean, you can see, I think yesterday's daily candle, well, pretty much closed right on it. You can already see that today's candle we have pierced below, and we're pretty much currently sitting right on that level. So that is pretty much it, that 50% level, 1296.86, 1292.86 is the key line in the sand this week. In terms of all time frames, you can see there we're just chopping, even on the 1 hour, it's just chopping around that level at the minute on gold. So yeah, that's it for this week. I hope you enjoyed this video. I hope you found it useful. If there's any other pairs that you want me to take a look at next week, then feel free to comment under the YouTube channel or send us a tweet to our Twitter feed, which is at AGM Markets. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.